Jackie Patterson is the author of The Truth About ETF Rotation. And what a fascinating topic, given that we are 10 years into this bull market. Jackie, can you tell us your strategy and how with ETF rotation you help investors have performance without the risk?
Okay, thank you. It's really great to be here. And yeah, with the ETF rotation, I like to take an objective strategy and have decided in advance what I'm going to do. And I just look at the performance of a select set of ETFs and pick the best ones and stick with them while they're still in the top half of the performers. And then as that performance falls off, as it often does, even in this raging bull market we've had, there's been occasions to switch out and move into, say, international stocks from domestic stocks, rarely into bonds and the kind of bond market we have, but the choice is there.
Okay, now your formula, right now, where we stand, what kind of allocation are you recommending and what are you rotating into over the next coming months?
Okay, so right at this instant, for the rotation portion of my portfolio, which is not the entire net worth, but for the rotating portfolio, 50% in small caps and 50% in mid caps. So right now the smaller companies seem to have the advantage, and my speculation is that that's good for the overall market. Now I'm still just looking at the numbers, looking at the track record of the small caps, and so I don't really know when this is going to switch. I'm going to look every week and stick with them as long as they're good, and once they start to falter, I'll be looking for something else.
Okay, so small cap and mid cap. So that means that you feel that the large caps are fully valued if you're focused 50% small cap, 50% mid cap. Within the small cap and mid cap, is it growth? Is it income? Is it emerging sectors? Can you give us some more information about those small cap and mid cap areas?
You know, right now I am just staying at the high level with, say, the MDY for the mid cap or the iShares funds, and not drilling down into the lower sectors. I did an experiment recently, and kind of the subject that I was talking about at this show was exactly what you asked, is what happens if you drill down into the specific sectors. And I wasn't able to really come up with a formula that allowed that to outperform. You know, I could definitely see the distinctions, but I think by the time one of those sector areas distinguished itself, it was time to move on to the others. So the one thing I could say, though, is with my experience, I've always had better experience looking at value versus growth, looking at large cap versus small cap. And that's always done better for me than looking at, say, healthcare versus materials. So I think that probably the more important asset allocation choices are to be looking at the size of the companies and those sorts of areas.
So we'll have really diversity within small caps, not just stick with one specific area, not necessarily growth or biotechs or financials, but be spread out. Okay, so international versus domestic. Obviously, domestic U.S. stocks have had some run, and the international has lagged. What is your opinion there, and what are you advising?
Well, I mean, right now I'm seeing the underperformance of the international, in particular the emerging markets, and there have been times, certainly in the last decade, where the emerging markets have been leading the way, and that was a great time to be in them. And now, you know, it is very hard to call a bottom in that. You know, I look at the charts and I can see some consolidation patterns, and yet when I compare them to the, say, the domestic small caps, clearly there's been outperformance in our domestic U.S. stocks, and so I'm not yet warming up to the international.
Okay, so you stay with the winners, let the winners run is part of your strategy? Okay, very quick but very important, the leveraged ETFs. We need to know, what is the truth about leveraged ETFs? How can we use them without getting hurt?
Well, I think that's a double-edged sword. In the first part of that question, how can we use them? You can certainly get more bang for the buck, if you will, more performance out of them. Great when they're going up. When it's going down, oh boy, the drawdowns, you know, the amount of losses from the top account value can be kind of extreme. So recently I've been experimenting with them, seen some good performance results over the last 5 years. Of course, we've had strong market in those 5 years, so I'm cautiously optimistic that there's a way to reap some value. And again, this is where I'm going to be sitting with my finger on the trigger, ready to pull out of those when they start to falter.
Okay, that's very helpful. Jackie Patterson, thank you so much. We're here live at the Money Show in San Francisco.